Okay, financial algebra. We are going to start learning about balancing a checking account. So first you're going to need your notebooks so we can go over some terms. Okay, you're not going to have to write down all of these terms because some of them you already know. There's a few selected I'm going to want you to write down. At any time when I'm going over this, if you need to pause it, that's fine. You can do that. And remember that it is on the classroom, so you can go back and listen to it by yourself and fill things in. Okay, so our account number, that's the number on your account, obviously. It's unique to each individual account. Nobody has the same one. Okay, your bank statement. This is a statement that usually comes in the mail. It might be online, but it lists all the transactions that have occurred within your account within a certain time period. Usually it's within the last month. You'll get one for your savings account and you'll get one for your checking account, any separate accounts you have at the bank. Okay, so a document that shows all transactions for a given period. The statement period is the amount of time that this statement covers. It's usually a month, so like it might say October 1st to October 31st. Your starting balance is what the bank says that you started that month out with, and the ending balance is what the bank says you ended the month with. Outstanding deposits. These are any deposits you may have made into your account that are not on the statement. Outstanding checks are similarly going to be checks that you have written that are not on the statement. Now, they may also be any transactions made with your card or electronic checks or ATMs, anything like that. So outstanding deposits are deposits that do not appear on the bank statement. Outstanding checks are checks. You might want to put withdrawals that do not appear on the bank statement. Now, balancing, you've heard us talk about that. That means simply that you're verifying that your check register matches the bank statement, that you guys are in agreement of how much money that you have. Reconciling is a term that the book uses, and it means the same thing, that you're verifying your bank records. So balancing and reconciling have the exact same definition. Okay, that's it for the terms. You can put the notebooks away, and we're going to turn to your note paper. And we're going to go over example 1 here. This says Nancy has a balance of $1,078 in her check register. The balance on her bank account statement is $885.84. Not reported on her bank statement are deposits of $575 and $250 and 2 checks for $195 and $437.84. Is her check register balanced? Explain. So we're going to use this little form down here in order to find out if it's balanced or not. So it says statement ending balance. We are going to start with, this is the ending balance the statement says she has. So we go up here, the balance on her bank account statement is $885.84. That's the number that's going to go in this first blank. Total deposits outstanding. We get that. We've got the 2 deposits for $575 and $250. Add those totals together, and the total goes here in this blank, $825. The total withdrawals outstanding, these are the 2 checks that didn't clear. So again, we're going to take those totals and add them together, $195 and $437.84. The total goes here on this line. Now, notice the plus and minus signs here. That means this is one large math problem that we're going to do. So you're going to take $885.84 plus $825 minus $632.84, and you're going to write the answer right here in the next blank. That's your revised statement balance. You have to do the math to get that number. Now we're going to verify this number against the check register balance. So you're going to go back to the check register, and the last balance they have in there is $1,078. We're going to write that down here. Now, because they match, it means that they're balanced. If they don't match, and you cannot just assume that they're going to match, you have to check. If they don't match, you have to go back and find out where the mistake was made. Did you forget to write something in the register? Did you add or subtract wrong? Did you write the wrong numbers down? Or is it the bank's mistake? But you have to find the mistake and get it fixed. Okay, so on to example 2. It's the same kind of thing. Marina and Brian have a joint checking account. They have a balance of $3,839.25 in the check register. The balance on the bank statement is $3,450.10. Not reported on the statement are deposits of these things and 4 checks, and they list those. Reconcile the bank statement. So we're starting with our statement ending balance. That's what her bank statement says. So we're going to put the $3,450.10 there. Total deposits outstanding. So we're going to take all of these deposits. The $2,000, $135.67, $254.77, and $188.76, and we're going to add them together. And we get a total of $2,579.20. Total withdrawals, we're going to take all of these checks and add them together. The $567.89 plus $23.83 plus $598.33 plus $1,000. And the total is $2,190.05. Now we're going to do this math problem here. So $3,450.10 plus $2,579.20 minus $2,190.05. The answer ends up being $3,839.25. So now we go back and we check what do they have in their check register. This number here, write it down. They match, so it's balanced. It's reconciled. Okay. Example 3 is more like what you would run into in real life. You're going to have your check register here. Underneath it, you're going to have the bank statement. So you can see it says Tina Weaver. It's got the address, the account number up in the right-hand corner, the time period. So her statement period is from March 1st to March 31st. Her starting balance, the bank says she starts with $871.50. Underneath are all the transactions for that month. We're not really going to worry about the dates that they have listed because their dates are going to be different than our dates. What we're going to worry about is whether it's a deposit or withdrawal, whether the check numbers match up, and whether the transaction amounts match up. So looking at our statement, the first one listed is a withdrawal. It says check number 395 for $79. So we go to our check register. I find check 395. It says $79. That matches. So I'm going to put a little check mark here in this list with the check marks. Okay, back to my statement. The next thing listed is a deposit for $600. Go back to my register. I see a deposit for $600. It's a check mark. Back to the statement. Next one says a withdrawal. Check 396 for $51.10. Check 396, $51.10. Gets a check mark. Next thing on the statement says a withdrawal, check 393 for $12. So go to my register, check 393, $12, gets a check mark. Next thing on my statement is a withdrawal, check 394 for $133.81. Check 394, $133.81, gets a check mark. Back to the statement, got a deposit for $250. So here on March 23rd, I see a deposit for $250, gets a check mark. Last thing on my statement is a withdrawal, check number 398 for $11.40. So check 398, $11.40, gets a check mark. Now, what we're really going to end up paying attention to are the ones without check marks. So we see check 397 for $50 without a check mark. We see $399 for $39 without a check mark. And we see a deposit on April 2nd for $700 without a check mark. Those are our outstanding deposits and withdrawals. So we go to this little thing here. We're going to start with our statement ending balance. Ending balance is right here. So that number there is what's going to go in the top here, $1,434.19. Total deposits. We were going back to the check register. Okay, the only deposit we have that doesn't have a check mark is the $700. So the $700 is going to go in our total deposits outstanding. Total withdrawals outstanding. Go back to the check register. We get the $50 and the $39. Add that to get $89. That's going to go on our total withdrawals outstanding. Then we're going to do our math. So $1,434.19 plus $700 minus $89 is $2,045.19. So we have to go back to our register. And look, our last total is $2,045.19. So that means our information balances. Okay, we're going to go on to example 4. This one will be a little easier if you can read it off of your paper. Notice that there are some transactions here that already have check marks. That is from the last statement. So that means they definitely will not appear, but they've already been accounted for. So underneath, you have your bank statement again. So we're going to take a look at this. The first statement says it's a deposit for $35. So we're going to look here for a deposit, $35, and it's going to get a check mark. Next one says a deposit for $100. Okay, I've got a deposit for $100 here, but it's already got a check mark. So I go down here to this deposit for $100 and it gets a check mark. Then the next thing on my statement is a withdrawal, check 1770 for $158.08. So it gets a check mark. Next thing on the statement is withdrawal, check 1768 for $46.50. 1768, $46.50, check mark. Next one, withdrawal, check 1769 for $74.64. So 1769, $74.64, check mark. Our last thing on the statement is a withdrawal, check 1765 for $19.50. That's all the way up here at the top, 1765, $19.50. It's a check mark. Now remember, we want to pay attention to things without check marks. So we got the 50 withdrawal here, 18 withdrawal here, 29.10 withdrawal here, 15 withdrawal here, and $125 deposit. So now we go to filling this out. Our statement ending balance, you find right here in the lower right-hand corner, $628.23. Our total deposits was the $125. Go back and add our 50 plus 18 plus 29.10 plus 15. You get a total of $112.10. So again, do this math problem. 628.23 plus 125 minus 112.10. And we get $641.13. Now we have to go back to our check register. And the bottom number is $641.13. So that means once again, we are balanced. Okay. So our homework is going to be worksheet 3-2. Sub will hand it out. You're going to do numbers 2 and 3 and 5 and 6 due tomorrow. And that's it.